Thanks for joining us. My name is Will Osborne. As Alberto said, I'm an account executive with Madison Trust.
And I'm Ian Robertson, Senior Account Executive. We are excited to dive deep into private placements today. So, you want to start just by giving a very general overview, and then we'll dive deeper from there.
You got it. Yeah. So let's just start with what a private placement is. So, simple definition would be it's a private sale of securities to normally accredited investors. We'll get into more detail later. But this is an alternative to, let's say, an IPO or selling securities on the open market, where there would be more restrictions, more regulatory oversight. So this is a great opportunity for, let's say, young companies to get started and not have to worry about the regulatory oversight from the SEC or from even the public. So that's just a general definition here. Anything to add there?
Yeah, I would just say like general things you're thinking about just in the mainstream thought of private placements would be startup companies, crowdfunding sites are generally private placements that they're raising money for, venture capital groups, private equity funds, real estate syndications, and there's publicly traded real estate investment trusts, the REITs, and there's also privately traded ones,
Right.
private placement REITs. And so we'll talk on that, but those are just general terms to start wrapping your head around what kind of investments may be applicable to the world of private placements.
Yeah, exactly. And when I say securities, I know that's a pretty broad term. That could be stock, common stock, or preferred stock in a company, like a startup, for example. Could be a note or a bond. Could be membership interest in an LLC or a limited partnership. So it's an all-encompassing term, but that's generally what we mean by securities, especially in terms of private placements. Um, and when it comes to the benefits, the main benefit is portfolio diversification, which is, I would say, the real benefit of a self-directed IRA in general, the ability to get out of the conventional products, publicly traded stocks, bonds, and mutual funds. This gives you an opportunity to invest in, young companies, companies you believe in, companies that were maybe started by friends or family members. We'll go into family members a little bit later, but it's still possible. Um, and the potential for higher returns for sure. As I mentioned, these are young companies, upstarting companies. Startups are very popular investment types on our platforms, and the investments are structured as private placements. And then the tax advantages of the IRA still stand, regardless of the investment type. There could be tax implications depending on what the company you're investing in is involved in. But again, this is something that we can dive into a little bit later. So that brings us to some slides. As I had briefly mentioned, these opportunities, these private placements, are typically for accredited investors, and we have the criteria there. I don't know if you want to read those out or briefly go over.
Yeah, I'll go briefly over it. So generally, you're usually in one of two categories. Either your household income exceeds 200 or $300,000 a year, depending on whether you're single or married. That's over a continued period of time, 2 years or more. And the other route in to be accredited would be to have a net worth exceeding $1 million. The side way into being accredited is to have series license, either as it says, 765 or 82, or to be considered a sophisticated investor, gets you there similar to those licensures. So,
Right. And these can be riskier investments, which is why they're really only for accredited, in most circumstances, only for accredited investors. These aren't regulated by the SEC. We'll get into more detail in later slides, but for that reason, the government or the SEC really wants to make sure that anyone investing can sustain a loss or is sophisticated enough to understand what they're getting themselves into, basically.
Absolutely. And also to touch on the way you're getting into private placements, just to touch on it again, is most of the time you know somebody to get into these types of investments, whereas publicly traded investments, public stocks, mutual funds, bonds, whatever it may be, those an advisor tells you about, or you find it online or something like that. A lot of the times with private placements, you know somebody who's raising money, and that's your entry point in. So I hear a lot, how do I find private placements? The answer is you got to know somebody, or there are some websites out there, some crowdfunding platforms that you can go and look at and see and do different due diligence on those. But for the most part, you know somebody that's involved, and that's a big piece of the due diligence process for navigating whether or not to do the investment. You probably know somebody, if you trust them, that's where you're starting to then go down the line of the due diligence. And that's a huge piece of a private investment because it's less regulated, because it's less overseen federally. You gotta do more of your homework on your side. It's not
Right.
as easily tradable. So if you find out you don't want this investment, or you don't want to hold it long term, you may have more difficulty trading it or selling it or liquidating your positions as you would very easily with a public stock.
Exactly. Exactly. Yeah, there might be some private placement opportunities that are advertised, but at the end of the day, they would still be for accredited investors only. Just want to point that out. Um, and yeah, that brings us to disqualified individuals and prohibited transactions in general. So any company, entity, really any entity, really, business doesn't matter, that's owned 50% or more by disqualified individuals is going to be disqualified from your IRA. So if you have a business where you and your spouse are both 25%, equity stakeholders, then that company is going to be off limits to your IRA, to your spouse's IRA, to your children's IRA, hypothetically. And we have a family tree up here. The red, the family members in red or orange, they are disqualified to your IRA. The blue is not. So generally speaking, anyone who's horizontally oriented on the family tree is not disqualified. Anyone vertically oriented would be. And we do have webinars that dive into prohibited transactions specifically. So I do recommend viewing that when you have a chance. We have a webinar replays page that you can view. But yeah, generally speaking, company owned majority by disqualified individuals is off limits to the respective IRA. And if someone disqualified has a management role with a company that you want to invest in that has a private placement offering, there may be some issues there. So in those circumstances, we would normally ask for an attorney or CPA letter before moving forward, basically saying, hey, the IRA's investment will not lead to a prohibited transaction, considering all details here.
Right. Let's go through a couple of examples of what may or may not be considered uh, disqualified parties transacting with one another. So, me, I have the opportunity to invest in my brother's company. He's raising capital. It's him and a couple of his friends that right now they each own a third of the company, and they're raising new capital. That would be fine
Yeah.
because he's my brother. Now, if instead of my brother raising capital, maybe it's my son or maybe it's my father that has a company and he's raising money, and it's still third ownership.
Yeah.
What are your thoughts?
So that could be okay, potentially, but that's a situation where we would definitely need an attorney or CPA letter before moving forward. And then the collective interest generally shouldn't be more than 50%
Right.
between the son or father in this hypothetical and the IRA.
Right. It would start depending then on the ownership percentages and the managerial roles within
Right.
the company, all of that. And the same is going to apply also with lending to those types of entities where there's disqualified parties. So keep that in mind. It also comes up quite a bit, and you touched on this with wanting to invest your IRA dollars into your own company, whether you actually own the company or whether you're simply managing or controlling the company. like a general partnership and limited partnerships. Can you invest in a limited partnership when you're one of the general partners? And the answer is maybe. I've seen it done before, but
Same, yeah.
you have to go through the right process to make sure you're not doing any prohibited transactions through that investment. And so that's where you're going to work with an attorney to confirm, just as a simple example, that you're not charging management fees to your IRA as one of the examples of what a prohibited transaction could look like in that scenario.
Right, exactly, exactly. So next slide here. Let's see. Okay, so that brings us to some regulations to consider, or really just some background. So as I've mentioned a few times, the SEC, the Security Exchange Commission, they're overseeing the sale of securities in the open market. And generally speaking, all securities need to be registered and regulated by the SEC, but there is an exemption. So that's Regulation D of the Securities Act of 1933. And there's two rules under Regulation D. There's Rule 506B and Rule 506C. So these are the offerings that we see most often. So a 506B offering, basically you can sell securities to, or an issuer can sell securities to as many accredited investors as they want, and then they can only sell securities to up to 35 non-accredited investors. And they can't advertise the opportunity either. So no solicitation there. That's 506B. For 506C, you can advertise the private placement, the investment opportunity, but it's only for accredited investors. And there's no limit as to how much capital can be raised with either of these rules. There's other exceptions or exemptions rather that we see or that we know of, but those are the two that really pertain to our clients for the most part. These are the most common offerings that we see.
For sure. And keep in mind also that this is something that may not directly be in the forefront of your mind when you're thinking about an investment. This may be something that's in the background that the company may be asking questions of you or having you fill out an accredited investor questionnaire or something to that effect because they're one of these, they're under one of these regulations. And so, again, it may not directly affect you. At least you may not think it does, but in the background, the companies that you're investing into when it's a private placement very well should be thinking about these types of things.
Exactly, exactly. And another thing to consider, if you personally are an accredited investor, so is your IRA, in case, because I know that's probably a question that will come up later on. Let's move on to the next slide here. All right, so when it comes to the titling and all the information that needs to be included when making this investment, we have it outlined here, of course. So the IRA is quite literally making the investment. I think, that goes without saying for the most part. But the titling for your IRA, at least if you're a Madison Trust client, is Madison Trust Company, Custodian FBO. So that's for benefit of your name and your Madison Trust account number. So for all intents and purposes, that's the name of your IRA. And then we have our company address there. That's where we're domiciled. That's in South Dakota. Mailing address, as you can see, is in New Jersey. And then the EIN is right there as well. So you don't need to memorize these. We provide these to all new clients or all clients trying to make investments. But this at least gives you an idea of how documentation needs to be filled out. So if you're getting ready to, invest into a private placement with your IRA, feel free to use this information now if you have the account set up, or even if not, just add in your Madison Trust account number when that's ready to go. Yeah, anything else to add on this page?
Yeah, I mean, I see all the time or hear people say, okay, I've got my subscription agreement, I've got my documents ready to go. I just need to set up an account. And my first question thereafter is, okay, you probably put your personal information on that subscription agreement, right? And they said, yeah, of course, I'm the one investing, but no, it's your IRA. So again, all these details are very important. It's okay to send us documents that have your personal information. We're not going to process that investment until this is all corrected, and our team will walk you through this make sure that, every subscription agreement can be a little bit different in the types of questions it's asking. Maybe it has a section for IRA investors, maybe it doesn't. Our team will walk you through that. So there are little nuances here and there to keep in mind, but we're here to walk you through that process.
Right, exactly. So yeah, so when we place investments, doesn't matter what asset type it is, but when it comes to a private placement, normally there's a private placement memorandum as well as a subscription agreement. So that's almost always sent to you personally, and you can forward those documents over to us so that we can do the initial review and make sure everything is completed correctly. In some instances, we work with sponsors directly. We collect the documents from them, and maybe they've assisted you already with the titling. That's great. So that makes the process easier. But if there's not a private placement memorandum or a PPM, as we like to say, keep things simple, there may be an operating agreement or a limited partnership agreement. There will also be certified articles of organization potentially. And there's some other terms for that: certificate of incorporation, certificate of formation. Really just depends on the state. This is applicable to LLCs for the most part. Same for a certificate of good standing, just making sure that that entity, normally an LLC, has been maintained and is in good standing. And since everything is self-directed, we're only doing, or rather processing transactions with your direction. So in order to place the investment formally, you need to fill out our investment authorization form. And this is a form that will be sent to you a number of times when you sign up, or if you already are a client, you already know this. We make sure to send that to you multiple times. But basically, we want directions as to where these funds are going. It can be done via check or wire. Makes really no difference to us other than the processing. And at a high level, that's how the process is completed. We review the documents. At the same time, you fill out that investment authorization form to kick off the process, and that's what you can really expect.
Yeah, and to add on to that, two major pieces of this process with the documents and everything that you may be asking is, how long does all this take? How long does it take to review the documents? How long does it take from the time I get started to the time I'm able to fund my investment? Really depends. What I'll say is, like Will mentioned, if the sponsor or the capital raiser, whoever your point of contact is that has necessarily introduced you to the private placement, bringing them in to Madison Trust, in other words, sharing their contact information with us or making an introduction, that can help dramatically speed up the process, because you may not have these documents, you may not be familiar, and so instead of being the middleman that we're trying to get the documents through you, instead we can go right to the source, easily collect them from the capital raiser. The private placement company certainly has all the documents that we need. It's just a matter of collecting them from them, and then we'll work with you to make sure things are filled out correctly and to get the investment funded. But in terms of timing, standard processing to review and process the investment is 4 business days. Expedited is 2 business days. And from start to finish, I hate to give a broad range, but you're probably looking at somewhere between 1 and 4 weeks, depending on how quickly we can get funds into the account.
It's usually closer to 1 week.
It really is. It's really only if, like, the annoying 401k provider that sends a check and they send it to you and then you have to forward it to us takes unnecessarily long. But otherwise, if it's coming from an IRA, yes, you're much closer to the 1 week.
Exactly. Yeah, we don't really understand why 401k admins like to cut checks and send them to you first, but that's just how the game is right now.
Yeah.
But yeah, that's where the 4 weeks is more realistic, which is not fun, but yeah. So let's see what we got here. And we basically touched on this already. But yeah, if we don't have a PPM, other documents might be the company bylaw so that we know what the company is doing at a high level. There's certain investments you can't get into. Anything that's dealing with federally illegal substances, for example, cannabis, psilocybin, we don't accommodate that directly simply because of our charter in South Dakota. You could do it under an IRA LLC. That we have webinars on the IRA LLC, but generally speaking, anything federally illegal we can't accommodate.
Also, international or
Oh,
foreign
yeah.
private placements, those would
Mhm.
also need to be done through the IRA LLC model. So definitely check that out if those are the types of investments that you're most interested in.
Exactly. Let's see. Okay, so here's our contacts. These are both of our direct numbers, by the way. Feel free to give us a call, and our emails, of course. No, just thanks again for joining us, everyone. It's always a pleasure. And yeah, please reach out. Happy to help getting an account opened, answering any nagging questions you may have before getting started. That's what we do every day, and happy to help you out.